Although the Dow continued higher today, it was the only index that showed any strength. The NASDAQ, in the overbought condition, gapped up today, was trading higher until near the end of the day. They started selling it off hard. The gap up in the overbought condition was your first red flag that the exuberance had finally come into the market. Now you have a left-right combo, a doji followed by a bearish engulfing signal. This should lead to some more downside, potentially another move back like we saw here. And an additional red flag was that even though the other indexes were opening positive, the transportation index was not selling off. It was selling off hard. And usually if something is selling off that hard, there's something has broken in the investor sentiment. So that added to the gap up in the NASDAQ as well as the S&P 500 was a warning that today might be the selling day, which it turned out to be. This is why having a few short positions in the portfolio is always prudent. For example, notice how on QCOM, when it hit the 50, did a kicker type signal to the downside. So a very easy way to keep your emotions out of your trading is based upon if the uptrend is in progress, you can still have a few short positions in the portfolio. Fortunately for candlestick analysis, the scanning technique to find the best trades, whether long or short, always provides more trading opportunities than most investors will be able to participate in. So if the market was moving up steadily, you might have 3 short positions, 7 longs, or 8 long positions, 2 short positions. But the strong sell signals, such as in QCOM, was based upon the kicker signal to the downside. Our recommendation last week to short IBM was based upon a kicker signal after your dumpling top, the slow rounding top. Told us that the probabilities of that kicker signal producing more downside was extremely strong. So whenever you're in a market condition where things are starting to look a little bit iffy, it allows the candlestick investor to start taking kind of hedging by having a few short positions in the portfolio. And some of the other well-followed stocks, such as NVIDIA, you can see once it got up to the top of this kind of resistance level, had a bearish engulfing signal. Today, it did a bearish left-right combo. This would have given much more clear warning that even if you were long, that when it came back down and you saw the market selling off, when it came back down through the low of the doji that formed yesterday, you were obviously getting a bearish engulfing signal, which added to the analysis of the sell signals that were being created up here, gave you a little bit faster realization to be out of that position. And Tesla provided the same scenario, where when it got back up to the 50, started seeing a little bit of indecision, and today's bearish engulfing signal, left-right combo, creates what we call a blue ice failure, where they fell through the ice, they came up trying to find the hole they fell through, they fail. The next target is the bottom of the pond or the lake, which would be the 200-day moving average. This is all just simple analysis based upon how human nature works time after time, creating sell signals at the appropriate places. That'll be it. We'll see you in the chat rooms.